We made a mistake, and we're learning from it. Recently, we shared an example in a podcast and blog post that included too much detail about a real situation. After feedback, we removed the content to protect confidentiality and respect the trust of our community. Lesson learned: even when names aren't mentioned, details matter. Going forward, we'll only share examples with explicit consent and anonymization. Our mission is to educate, always educate. We're on this constant search for the truth about real estate investing, to empower investors, but we want to honor privacy every step of the way. Thanks for holding us accountable and helping us improve. With that said, I'm re-recording this introduction. This episode is titled How Canadian Developers Are Using Grants to Fund Affordable Rentals Without Giving Up Control, with Chelsey Fawcett. So if you've already listened to this episode, just a heads up, you can skip the rest of this episode. Here we go. Missed opportunities. I'm talking about the Blue Jays, World Series Game 7, bottom of the ninth inning. IKF was the runner on base, on third base, and at bat was Dalton Varsho. If you don't know Dalton Varsho, well, the Blue Jays coaching staff should. And as the coaching staff of the Toronto Blue Jays, they should know that he rarely hits the ball to the third baseman. In over 2,500 at-bats, Dalton Varsho has only hit the ball to third base 4 times. Only one of those 4 times was a true lineout. That true lineout was the worst case scenario the coaching staff was guarding against. Again, that worst case scenario had a 1 in 2,500 chance of happening. Instead, the coaching staff, credit to them, they are trying to win. They use traditional strategies in the heat of the moment without factoring in expected outcomes. Erwin Clement hit a deep fly ball 2 batters later, which would have won the game. And now this, of course, is an imperfect extrapolation. So the IKF should have scored. And if, again, imperfect extrapolation, Erwin Clement hits a sacrifice fly. This was a painful ending to a really amazing, improbable year. And I look forward to years to come. James Beaverbree signed. He exercised his option, so he's coming back. Great things are on the way. It's looking like the Blue Jays will be a perennial winner, and I'm happy about that. Now, we as investors, we have the benefit of making decisions without the pressure of 30 million viewers watching us on TV, 50,000 fans cheering and yelling, plus myself yelling at home, but they wouldn't hear me. Anyways, we have the time to look at the numbers before making calculated, pragmatic investment decisions. So to you, my 17 listeners, and we've done over 400 plus interviews. Some of you have listened to all of them since 2016. With some of the best real estate investors in Canada and the world. I've distilled down what I think should be the tips and secrets into a handful of rules that I now follow, and they've changed over time as new information became available. Anyways, as the numbers changed, like affordability and cash flow, here's a few rules for the lazy and passive investor in 2025. Keep it landlord friendly, passive cash flow, and boring. Again, this is meant for the passive investor. Use leverage, but don't over leverage. Follow the numbers. If you're not good with numbers, ask a professional who isn't earning a commission on your deal to review them. That could be, for example, your real estate lawyer or a friend who's a veteran of real estate investing and has owned over 10 properties. Preferably, they've gone through a cycle or 2 as well. So that means over a decade. What used to work for real estate investors won't work going forward. And if you don't believe me that people can change opinion, people can change. Just look at Bill Gates. Go ahead and Google Bill Gates and climate change. He recently changed his stance to say that science is largely going to take care of, modern science is taking care of climate change, and that efforts should be reallocated to support the most vulnerable who would be affected, generally the poor people who would be affected by climate change. And that's based on new information available to him today. He's changed his mind. I've changed my mind many times on this show, anyone who's followed along. I used to be the biggest real estate bull for the city of Hamilton and surrounding areas, and Ontario real estate. But landlord friendly, they are not. Nor are they immune from the affordability crisis that's going on right now. Prices still remain high. There's pressures on rents to go down. My point is, things change. Best practices change. It's our job as investors to stay on top of changes to win our own personal World Series for financial peace. Now, if you're like pretty much all my clients and people who are reaching out, you're probably looking to sell your investment property. My colleague Tim Hong and I will be hosting a free webinar on how to maximize your return when selling your income property, even if it's tenanted. The webinar will occur Tuesday, January 13th at 8 p.m. Toronto time. Tim and I have been 4-time award-winning Realtors of the Year to investors since 2010. So you don't want to miss this opportunity. This presentation will be updated specifically for 2026. It's because it'll be a new year for more profits and fewer headaches. Hope to see you there. And if you're looking for details, we'll release them probably within a week or so. So for now, save the date, Tuesday, January 13th, 8 p.m. On to this week's show. Today, I'm joined by Chelsey Fawcett, president of Ottawa Real Estate Investors Organization, that's OREIO for short, and founder of Grant Solutions Canada, a firm that strategizes and secures government and private dollars for real estate projects, and with a focus on affordable housing including prefab, tiny home manufacturing. We talk about that on the show. It's pretty cool stuff. Chelsey's team works end to end, lobbying, underwriting, and grant writing to help developers structure viable build and hold rental projects that tap into hybrid loan plus forgivable grant programs. That means free money, including tax credits, shred, R&D, employment grants, and more. In the last 2 years, her firm has sourced over 200 million in potential funding pipelines for clients across Canada. Now, note that sourced does not equal awarded, and she now leads OREIO's monthly education and networking engine in Ottawa. Lovely organization, lovely people. I've had several members of their board on the show, again, and they're super inexpensive. They are a nonprofit, and the thing I love about nonprofits is they are super affordable, super good, great value. OREIO, I would count as one of them, especially in the real estate industry. Now, why she matters now. Construction costs are high. They've been higher than ever. Canadian rentals are tight, and policy is shifting. Chelsey shows investors where non-dilutive capital is hiding, how to qualify, for example, affordability thresholds such as 80% of local market medians. That means like what's affordable rent, and what to expect from CMHC, NHS toolkit, and provincial municipal stacks, Canadian Mortgage Housing Corporation. So if you're interested in following Chelsey, her website is grantsolutionscanada.ca. If you're looking for more information on OREIO, OREIO.org. That's OREIO.org. And we talked about tiny homes on the show as well. I actually show some of them for those who are watching this on YouTube or want to go to our YouTube. The show on YouTube, or Truth About Real Estate Investing. The website for a small living company is www.smallliving.co. Please enjoy the show. Hi, Chelsey. What's keeping you busy these days?
What's keeping me busy? Well, we're here to talk about real estate, and we have lots of different exciting changes that are happening in that space, which is keeping me really busy. Uh, Other than that, I guess just day-to-day life, enjoying
Yeah.
being outside while we can.
Aren't you the head of OREIO now as well?
Yes, the Ottawa Real Estate Investors Organization. I became the president of OREIO back in June of this year.
And you've been on the board for a while?
Yes, this will be my second year on the board and my first year as the president.
And why'd you do that? You weren't busy
Why?
enough?
Why did I want to add more shackles? Um,
Because, oh, actually share, like what is the commitment like? What is like the weekly
mm,
commitment like?
Weekly commitment. I'm not sure if it's completely weekly, but it is monthly. Like we do have our monthly, every second Wednesday of the month, we have a educational seminar that is hosted for both members and non-members to attend. The following week, not a public event, but we have our board meeting where we are strategizing and doing operational discussions as well as additional event discussions of what we're going to plan for the rest of the year. And to come back to your previous question about um, why I wanted to do a president position, I was originally in the membership coordination position. And that really meant that I got to hear a lot of what people want to see, what they like, what they want to see changed, what they want added, and being the first responder to a lot of that feedback. And what it really inspired in me is kind of I guess, a different perception of what OREIO is. And so I used to work in events management. I have a background in theater. I'm used to live events. That's a lot of what I did, and writing grants for those events. So I really started to shift my perspective around OREIO, that OREIO is a educational opportunity for real estate investment to learn as a content. But at the end of the day, it's managing live events that happen every single month. And so when I shifted my perspective around if I could do a president role, that really helped me reposition the angle that I'm approaching it with, because regardless of the content, it is a live event, and being able to support the memberships and support people to be coming in that capacity is where I have like a vested interest. So that way we can do more community engagement. We can bring in different types of speakers to speak about different types of content, and create a more well-rounded approach to investing for both beginners and maybe seasoned investors that are looking for diversifying how they invest in real estate. So that was my interest.
Pretty interesting. And then what's the hourly commitment?
Hourly commitment? I don't know. I feel like I'm working all the time because I'm just always in my thoughts.
Hmm.
So Um, I mean, it's all volunteer. So other than our two commitments a month, our board meeting and the actual event, it's like any other board presidency. The summer months can be a lot less because we're not doing as much. And then when we get into the season more, it can be more hours, but less than a part-time job because it is a volunteer position.
Mhm. And what are our members looking for these days? We're recording on October 2025. What are people looking for more of, and what do they want less of?
Well, I'll start with that first. I've received feedback around people enjoying networking and being able to cross-pollinate through talking with more seasoned investors to younger investors and being able to share that different types of knowledge by getting different types of investors in the room. And people have really enjoyed the fact that we're trying to facilitate different actions around that. So we've introduced colored stickers that you can put on different name tags to identify as a new investor, service provider, or seasoned investor. So that way you can start a little bit more of an icebreaker in there, acknowledging fully that I'm an introvert. I really gravitate to being able to have icebreakers, especially if you're trying to meet people you don't know, and that can be pretty overwhelming. So people have enjoyed that we've started facilitating a bit more of a communal social aspect in between our educational opportunities. And then I think what people want less of, we've been that's a hard one because I don't want to critique, but it's also we've been implementing more streamlined processes to allow for easier access into our website, to have accessibility to not pre-recorded, if you recorded versions of the presentations. So that's kind of the bigger streamline that we've been seeing, is that we have been getting more requests and we have been answering those requests by recording our presentations, and we are starting to upload them on our website for members to be able to access either because they missed the event or because they want to go back to the event.
That's really nice of you guys because I work for another not-for-profit, and it's people ask for it all the time for meetings to be recorded. They don't understand the amount of production that goes into it.
There
Like
is a
for
lot of production
yeah,
that goes into it, and from being in that world, it takes hours to do. And people,
yeah.
yeah.
Well, and if you're to hire that out, like our expenses were significant, like several $1,000s per meeting, and so for a not-for-profit, especially when you're charging as little as you do, can you share with the listener how little you charge at OREIO for membership?
As of right now, I will say that our prices are financially accessible. We are changing our pricing structure that will still remain financially accessible. But if you price compare it to other memberships, either in Ottawa or just in the surrounding area for professional associations, it is still competitively significantly lower than others. Like I have a different membership I'm a part of. I pay $750 to be a part of it a
Hmm.
year. So
Hmm.
there are different price points, but ours is still, it's going to be increasing, but it is still going to be at a financially accessible level for people.
And how much is it
Right now, it's 127 for a year.
for a
So get it
year?
now. So get it now.
Oreo is like the Costco hot dog. It hasn't changed forever, even with inflation.
I know, and now they have a new president, and now I'm making everything, shaking everything up.
Yeah, because
Price
inflation's not real,
changes.
so you just hold that price where it is.
Oh, exactly, exactly.
Actually, how do you even do it? Because like you rent your venues are very nice. I don't know how you keep the costs under control.
How do we keep the costs under control? Well, we do. I think it's just around keeping our expenses low and predictable,
Hmm.
and we diversify our revenue. So most of the revenue coming from sponsorships as well as memberships. So
Hmm.
because we have that revenue that's able to be essentially predicted year over year. And because we become faithful clients to our venues, to our vendors, we're able to create more financially accessible deals on the back end to keep the quality high, but without scrimping on what we can do.
$127 per year, and not even HST.
No.
Right, right. The not-for-profit I belong to is over close to 5,000 a year. I
There
think
you
my
go.
my first year was a lot more than that as well, probably 7,000 to 9,000 for the initiation, including initiation. So get it while it's cheap, folks.
Yeah. I can't, I will say that our prices aren't raising that much. They're
Hmm.
just raising in accordance to being able to provide the services that we are. That's why I said at the beginning, we're still staying within a financially accessible range.
Right.
Yeah.
When you're adding more service by recording meetings.
Hmm.
So you need a
Exactly.
platform for that. You need the equipment. You need people to manage the equipment. Again, my experience is usually a couple $1,000s per event for that. So I don't know how
Yep.
you do it.
Yep. That sounds about right.
So let's talk about what you do for a living, because it ties into what happens at OREIO as well. Because you've been a speaker as well at OREIO, and that's part of your role as being on the board as well. A lot of people in general are out there talking about development. Um, I've said many times on the show, 10, 15 years ago, pretty much every real estate investor in Canada could just buy a single family home and cash flow positive. Those days are long gone. So it seems almost everyone's talking about development, and that's kind of something that you're into.
Yeah, so I own my own firm. I'm a grants consultant by trade. And so now my firm consists of grant writers. We have accountants, underwriters. I work in liaison with policymakers as well as lobbyists. And what I support is affordable housing. So a lot of my clients are both for profit and not for profit. I'd say I have about a 50-50 split.
Hmm.
So what we do is we help support a development to get to fruition with government funding. And government funding can come in many different ways. It can come from the three levels of government: federal, provincial, and municipal, depending on what the project is and what it's available for. And then there's also additional opportunities depending on if it's for profit or not for profit, where you can also access donation campaigns, large gift donations, sponsorships, as well as foundations. So we help do an end-to-end grant management pipeline for our developers to lower their expenses and get their projects built, all in the effort of supporting more affordable housing in Canada.
I'm on your website.
Mhm.
200 million in source funding for clients.
We have. So I started my firm. This is our second year in operations, but I've been doing grant work for my entire career. And we, through our work so far, we have created over $200 million in sourced funding. So sourced is not awarded because it can take years to build these multi-million dollar developments. So it is all the funding that we have sourced for our developers in order to get their projects up and running.
Tell me more about this. Why do people get into this area? Into why do people need grants, and why do people develop for not for profit and for profit?
Gosh, I feel like you'd have to ask them those questions, but the clients that I have, that's one of the questions I have asked in the past, where, why, what is the why towards this? And whenever I've spoken with, like I'm a part of some angel investment circles as well. And when I speak about the work that I do, usually everyone that I speak to has some sort of response that is personally connected. I remember speaking with one angel investor, and when I told them about what I did, their immediate response was, "That's something that I'm going through right now because my son doesn't have a place to live." And so this is something that connects with everybody in Canada. And um, so I feel like why people want to build affordable housing versus for-profit housing is just, we just need it. You know, it's just like other charities. Why do people want to do cancer research? Why do we need to support the arts? Why do we need to support children's hospitals? It's just we need to. People need a place to live. That's a mandatory requirement. Um, it's an ethical right, and we just everyone deserves a safe place to live. And I think there's many people out there trying to help solve that problem.
Yeah, I find, and people I've spoken to and people especially on the show, it's, well, some of them is for strictly for profit and some are just out of personal interest in there. They've already made a lot of money. They're more in
Mm.
this for what, self-actualization.
Like a philanthropic element to it.
Partly, because I remember one of the guests I had in the past, like the returns that he was offering to be an investor were below market,
Hmm.
right? I forget what they were, but call it like 7%.
Yep.
And
Yep.
and then only people who invest in that sort of thing, it's because they're not looking for the return.
Yeah, and like I've had experiences and I have a current deal that we're looking at right now where we are soliciting to get free land to develop on, and we're quite close to getting it. And it's one of the first questions we ask is just, you could sell this land for $2 million. Why are you willing to give it for free? And it's, because they want to leave a mark, they want to leave a legacy. They don't need to make the money. They want to be known as a person that was helping solve a problem at the end of the day. And yeah, we run into that a lot, that philanthropic angle.
And then, so tell us about the Grant Solutions Canada. Like, why does it exist? Are grants easy to get? We're talking about affordable housing. It's affordable to build housing, isn't it?
Is it affordable to build housing? I don't think so.
No.
Um,
In
no,
my travels, Canada's actually quite bad at it. There are countries
it,
who are way worse, but for a rich country, we are quite bad at it.
mhm. It should be affordable to build housing. Your first question about why Grant Solutions Canada exists comes from more of a personal place. So I've worked in not-for-profits for over 15 years, writing grants and running really large charities in executive leadership levels. And when you work for a charity, that means you are overworked and underpaid, and you're working evenings and weekends, and you're relying on government funding that at any minute, for reasons beyond your control, can get canceled, which has happened to me, or it can get significantly reduced while you're halfway through a project, but you're still required to give the same outcomes and you just need to figure it out. And all of those precarious, very volatile financial planning situations are very stressful. And you're already working with a really small staff, usually, because not for profits are not supported the way a for profit is, because they don't have the same revenue opportunities in some situations or the same models that allow them to have those revenue opportunities based on the grants that also support them. So, uh, in short, I burnt out and I was done. I was done working a very low entry level salary job when I'm holding senior level positions and having a young family at the same time. So I left that position, my last not for profit charitable position, and started my own firm because what I wanted to do was make something that was accessible to not only me and recovering from burnout, but also allowed me to find that balance between my love of real estate, supporting community and affordable housing, but also loving myself again, not working evenings, not working weekends, not in those struggling do or die moments. And yeah, so that's how my firm was born. And as we've grown, I've been learning more about this concept around demasculinizing the workspace. So we don't work 9 to 5. We're 100% remote. We have unlimited vacation days because I don't care when my employees work as long as their clients are happy and the deadlines are met. So if you've got kids and you can't start work at 9 a.m. because you're dropping someone off at school and you got to go pick them up at 3:30, good for you. Go do that. If you got to work, that means from 7 to 10 p.m. because that's your prime time. Everyone's asleep, no one's around. Good for you. Awesome. Do it. So we're trying to do that. And when I started posting for job positions with that statement around what's it like to work with us and how we're following that, um, I received a lot of applications from women who, when I was interviewing, specifically were saying that like this is a job that is designed to have the door open for me. So it's accessible based on having to be the primary caregiver in my family unit. And that felt really good on my side that what I've been building for myself has also been able to support other people because that same need goes beyond my own given circumstance. Which has,
Fascinating.
no, has
It's
nothing
interesting.
to
It's
do with
called
real estate.
demasculizing. Um,
Mhm.
we personally hire in our businesses. We actually hire a lot of moms.
Mhm.
It's a competitive advantage. I think that we have is that a lot of the work can be remote. And yeah, client work can be done anytime they want. Really, like no, only staff are only required to come in one time once a week. And even then, like it's if you have something else, it's okay.
Yeah, it really keeps it like open access for all pools of applicants. And it's not my term demasculizing the workspace. That is a term that's how it's been defined. And I'm going to butcher this information, but I'm going to try and say it anyway. The way it came about was around the fact that women were doing a lot of the work while World War II was happening. And then when all the soldiers came back and they needed work again, there was a redisplacement of women back out of the workforce as well. And therein lied the 9 to 5, Monday to Friday structure that then began to be created, is from what I understand. So that 9 to 5, Monday to Friday structure being created from that redisplacement is where that term came from.
Fascinating. I'll have to dig into it.
Yeah, I don't know if I'm completely right. It's very much from a recall memory of where we're talking about like 2, 3 years ago where I learned that term. So I could be still very wrong on its
I want to say
origins.
I'm always because I'm an immigrant, right? So a lot of like these Canadian euphemisms I'm not familiar with, and that's a new one I've heard as well. The one that you just shared, and I'm curious as well to understand it as well because when the world ended, for example, we stopped having to manufacture implements of war,
Mm,
like bullets and armor and armory and stuff like that, and rockets, and so.
yeah.
That's a job I think anyone would be glad to give up.
Yeah, yeah, I think so.
So back to real estate. Why are people needing grants? What kind of project does someone need a grant for? What grants are available to real estate investors?
Um, so I'm going to answer that in two different ways because there's for profit and not for profit. Um, I'll do the for profit first. When it really depends on the project. So there are grants solve problems, and the problems are identified by the government. The problem currently in real estate is affordability. So there are grants to solve that problem in its crudest forms. So it has to be an application from whether for profit or not for profit, depending on the eligibility. So for profit, there can be grants that are directly related to the development, and there are also grants that can be directly related to the company. So company grants could be things like employment grants, tax benefits. If they're doing any research, that can go into shred benefits. environmental tax credits. There are things on the back end that can help. If they're, like I said, if they're doing more development stuff, there are grants on the front end that can help with research and providing funding to the initial research. If they are doing the development itself, there are a lot of funding options that are both hybridized as loans and grants, where they can be offered a loan that has forgivable portions up to a certain percentage. The amount of that can vary because it depends on the project itself. So, it could be, and I'm making up numbers for an example, but you could apply for let's use an easy number of $100 million. And they say, well, we don't agree that you need $100 million, but we do agree that you need something. So we're going to give you a loan at a different amount. And then a percentage of this loan is forgivable as long as you stay within the eligibility requirements. So, for example, with CMHC, not with MLI Select, that is a different stream and not related to the grant program. But with MLI or with CMHC's Affordable Housing Fund, a certain percentage of those units have to be qualified as affordable housing. And that in CMHC language means that the rent has to be lower than the median market for that area. And it has to be lower, I believe it has to be 80% of the median market in that area. And 30% of the units have to meet that in order to be eligible for that loan and grant hybrid with the Affordable Housing Fund.
Interesting. So let's try to use some real, like, I'm just gonna throw some numbers out there. Like, for example, I'm gonna guess a 1-bedroom apartment in Ottawa is around $2,000. That fair?
Maybe I don't live in Ottawa, so
Where do you
we could
live?
just I live in Gatineau. But
Okay,
that's
what's 1,000 square foot? What's a 1-bedroom for in Gatineau?
um
1,800. Let's use 2,000 because
let's
it's a
just
rounder
use
number.
2000. Yeah,
Sure.
let's keep it
So
easy.
you're saying 80% would be considered affordable. So it'd be 1,600 for a
Mhm.
1-bedroom, and then so already off the top of my head, I don't know how affordable that is for someone from Gatineau, for the average person from Gatineau.
Yeah. Yeah, I know, right?
Let me
That
actually Google it. Average income in Gatineau. But I already know it's not going to be good.
it's also
Average
going to
salary is
be
around 55,000.
yeah.
So 55,000, CMHC 55,000. CMHC guideline is that no more than a third of your gross should go towards rent. Right? So that's about
That's a
18,000.
guideline, like
Yeah.
that's what they recommend. That's not a part of a requirement, right?
Correct.
Yeah. Okay.
So yeah, so affordable for the average person based on CMHC guidelines is about 1,500 a month.
Hmm.
So
And
close.
if you're making 50 grand, then you're taking home about 3 grand a month, which still means that that's about 50% of your paycheck going to rent.
Just rent, right? There's
Yeah.
still utilities, yeah.
Yeah.
And that's why I weep for this country.
I'm
Like I've
not
spent a lot
saying
of time
this
in
is,
Asia, for example, like
yeah.
where it's like for listeners probably tired of me talking about it, but affordable housing in places like in Asia, like Singapore and Hong Kong, you're talking about like $400 to $600 a month for rent in government subsidized housing. We're talking about 4 times that in Gatineau, which
Yeah.
is a non-expensive city by any Canadian standard, for in Canadian terms. So
Fair.
I weep for this country. Sorry.
No, I'm not saying it's a perfect system. It's just the system right now. So,
Mhm.
yeah. It's I have worked with developers where after we run the numbers, uh they say, and I agree with them, where it's just like, you know what? It's not going to be possible for you to build this using this opportunity because you're going to be in debt too much, or it's not going to be returning a healthy enough investment for you to be able to make a cash flow that allows you to even pay off the other loans or the other places that you've borrowed money. So I'm fully aware that like from working with developers that for some it really depends on what the project is for it to be a viable
Right.
opportunity.
And
Yeah.
these projects are for rentals, right? Long-term hold.
Yes, they have to be rentals.
Right.
And there's a reason for that, which is to keep them affordable. Because say they were, people were receiving grants and loans to build affordable housing. Well, it's only affordable the first time it's sold. And then, maybe that person lives there a year, 6 months, whatever, and then they sell it again at market value. And then it's the system has stopped working to maintain it as affordable.
Yeah, while we, the taxpayer, come out of money to help finance this.
Yeah.
So and so these developers, their intention is to hold them as rentals, or are they selling it right away, or just in general? I'm just trying to get an understanding of what your clients are, or what they're doing, what their goals are.
I can't speak to people that aren't my clients, but a lot of the proposals that come across my desk are build and hold. So because those loans they're mortgages, they have time attached to them, and the intention is that you're building it and you are holding on to it for the length
Right,
of the mortgage because you have that forgivable portion as well.
right. And
Yeah.
your clients are where are these developments? Mostly
I
Ontario, Quebec, or
No, I have developments, mostly in Ontario, but across Canada. We serve in every province. So
right, right,
I have some in Halifax, Quebec, and Ontario as of right now.
right, right. Because I'm
Mm.
just thinking, because even though these are, they're getting grants and some of it's affordable, they're still subject to the Residential Tenancy Act
Of
or
course.
or Quebec's version, and so they have the same non-payment of rent risks that we regular landlords have.
Yeah. Yeah. And I mean, I don't run a building like that, so I can't speak to that in too much depth, but I know that, from some of my clients' stories, they do have support systems that are they're not, nothing's ever a complete solution. But there are support systems out there available to keep people in their housing. There's rental forgiveness.
Hmm.
The bigger pain point that then becomes uh, communicated in those circles is that whatever the building is used for doesn't determine how much it costs to operate the building. So whether the project is a for-profit apartment building or a not-for-profit apartment building, the construction costs are the same, property tax, the utilities, everything to operate it is the same. And
Hmm.
therein lies a pain point that a lot of not-for-profits have in order to keep the lights on and do those operational costs while keeping their units below market rent,
Hmm.
which can get tough.
Yeah, and I've heard from friends in the space of who actually are in construction and even their own construction costs. They're usually talking about somewhere over $400 per square foot.
Mhm.
And you saw me talk about my own presentation about the states. We're buying houses for 116, 125 US per square foot, and that comes with land. So this formula in Canada is really difficult to as good hearted as some of these developers are, especially the not for profit ones. It is just so much more expensive to build anything in Canada.
Yeah. I don't think that's going to change anytime soon. Um, I know it's a really simple answer, but what people won't stop taking loans until people stop giving loans. People won't stop buying at high prices until people stop accepting high prices. Like it's really it's there's got to be some systemic blocks put in place if we want things to
Hmm.
change for
Hmm.
sure.
It's just like restaurant owners. I like bless their souls. I love going to restaurants and because I understand how hard they work for not enough money, in my opinion. I think developers are no different. For profit, not for profit, they should. All Canadians should be thanking them because who else is going to take on this level of risk?
It's all headache. Like there's really there there there's no difference in the projects themselves. Like the bottom line is different, but construction is construction, and building is building. Uh, whether the rent is at market or not at market value, is it's not the biggest difference in the grand scheme of things. Everyone's just trying to develop, and yeah, it's hard. It's hard on both sides.
So all your clients' projects, they are for like multifamily, long-term residential rentals.
Yes, some of them. I have a few that are prefab, and we're doing mostly research and manufacturing grants. So that's a whole different, area of funding,
Mhm.
where they're not actually developing the buildings on site. We're doing manufacturing funding. So we're getting them technology grants, manufacturing grants, employment grants, and environmental tax credits. There's a lot of funding support right now for from Can Export for if you're importing or exporting materials and product to and from the States or beyond. So based on like tariffs, there are tariff relief support grants as well. So yeah, we work in all spaces. If it's land and land related, that's our bread and butter.
Are you seeing any projects that provide us hope that we're going to see some savings in construction costs?
Uh, a lot of cool projects come across my desk every day. Um, I've seen a lot of very ambitious projects that are where I remember one, it's working and it's working in one place and it needs to scale. So that's a lot of what I see come across my desk is they go, we have a pilot project, we bought a little bit of land, we built one building and it's working. It's, I'm making up an example now, but it's 100% net negative in terms of carbon. It's off grid or whatnot, and we just need to scale it. So I see a lot of those coming across where it's like people get a lot of seed funding, but then to get that next step into scaling can be difficult. Both stages can be difficult, but the scaling can be also difficult when you haven't balanced a budget yet, for example.
Hmm. Yeah, that's another interesting thing. And I don't know how what's different between the States and Canada, but I've seen like Elon Musk reposted a tweet about a company that's building tiny homes for like $70,000.
Mhm.
But we don't have anything like that in Canada.
We do. We have a lot of them. The
Not the
tiny
same
homes
scale.
shows. No, but the Tiny Homes Show is an excellent resource to go
Yeah.
to. They came to Ottawa a couple of years ago. Now I think they're based out of the home show itself is based out of a little town south of Hamilton. But Bianca Metz is the person that runs the Tiny Homes Show, and she is a wonderful person doing great work. Where a lot of the vendors, when I was walking around it, they are tiny home builders, and got to walk through homes that were as accessible as $30,000. And I got to walk through other homes that were debatably as accessible at $200,000. So I think in some ways we just don't have the scaling, which is where there is a lot of prefab focus going into now, um, from the government for additional supports. But I wouldn't change like your entire development mandate into let's go into prefab just because there's funding there if you're not
Mhm.
already in the prefab industry.
Do you know much about the prefab industry? Like, for example, Mattamy Homes has been building houses indoors for more than a decade. I don't really understand the difference between what's been existing going on in Canada for like a decade or two versus any of this new tiny home prefab stuff.
Like what the difference between them is?
Yeah. Like, why is it just seemed like there was like hype in the last few years around like building stuff indoors. Like, again, Madam East has been doing this for more than 2 decades, building
Hmm.
houses indoors and then indoors. Again, this is Canada. We need if you can build indoors, it's all the trades I imagine like it better. They probably even like it better in the summer as well. They can do their construction work in air conditioning versus being outdoors under the sun.
Yeah, I think there's a scaling opportunity in there where people look at it and go, you know, one of my clients, they're scaling right now. They build tiny homes, energy efficiency homes, and they're getting to the point where they're building three, sometimes more than three a month,
Mm.
and doing construction in the winter indoors. Not a bad gig. The manufacturing to be able to be constant and on shift work rather than outside. The fact that you can purchase a home and then purchase land, have all the hookups. Sometimes, I guess it depends. Again, it depends on the project. It could save you money, but it also could possibly let you break even. But it allows you to kind of work in phases, perhaps, if depending on your financial situation.
Mhm.
So I think what it comes down to with affordable housing is that housing in general, different things will appeal to different people. I think tiny homes appeal to people that want to minimize, that maybe aren't looking to increase equity, because there's usually typically not a lot of equity increase in those types of homes. Um, it allows people to live debt free and put more money towards maybe retirement or different financial sustainabilities, because they know that their house is paid off because they could afford to pay off their house and they're not connected to decades of debt. So I think it really kind of just depends on what fits the lifestyle of that particular person, right? Like, why are some people completely comfortable living in a condo their entire lives, but other people really strive to live remote in a, 100-year-old farmhouse? It's just people have different preferences and different interests in how they want to live their lifestyle, both from cultural perspectives as well as personal preference. So
I don't fault these people. Like to be able to park in my own driveway and not have to see anyone go in my own place and nor hear anyone. I live in a detached home for a reason.
yeah, and the running joke I have when I drive by some of these houses that are gorgeous and they're for sale, and they're expensive because they got the big bay windows, and I say to my husband, I say, I would never pay that price to be 5 feet away from my neighbor. So it's just like, I want to pick up that home and then take it into the woods and then put it back down, and then it's worth that price to me because I want to pay to be away from people, not to be close to people.
So your client that's prefabricating, are they selling them retail or they have their own subdivision that they're filling out?
They're selling them retail. So they're one of the only retail,
Do you want to shout them out?
yeah, I guess I could. The Small Living Company. You can buy their homes on Home Depot, actually. Mm-hmm.
That's awesome.
Mm-hmm.
I don't know if I've come across this company before.
They're 100% Canadian, and they help support rural employment as well. And they're building a lot, and it's really great.
Where are they out of?
They're out of Rockland, the Rockland County. It's about an hour-ish from Ottawa, out in Hammond.
Which direction? I haven't heard of either place.
Okay. If you go, um, my mental map's going to fail me, and Brad's going to listen to this. Uh, East, southeast of Ottawa, about an hour. And they're selling their work all over the United States, into Mexico, and across Canada.
And you can buy it in Home Depot.
Yes, you can.
That's fascinating. No, it's the first I've heard of these folks.
Hmm. Yeah, they're doing some fantastic work and they're scaling really nicely.
And they have their own development, looks like.
They do manufacturing of tiny homes. So it's all indoors.
That's crazy. So, well, I don't know where I am now. Smallliving.co for anyone who's interested in checking out the website. And yeah, I love it. Government grant to support the Canadian business addressing housing. It's what they're for. It's what government's supposed to be for.
Yeah, so this would be a specific example of that. Because they would be eligible more for the manufacturing grants because it's prefabrication. That's where a lot of developers that are already in that prefab space would be eligible as well.
Super cool.
Again, I say that lightly with depending on the project. It's not, you know, it's not just because you do it, you can get money. It's you have to have a project that aligns with the government requirements of the manufacturing.
Like I'm literally on Home Depot's website right now for a 10-foot, I don't know, 10 by 8. I can buy it for $21,000.
There you go.
Not sold in my local store though. That's okay. We'll figure this out later. That's
But your
amazing.
delivery can be between October 19th and November 1st, it looks like.
Oh, right. That makes sense. These aren't exactly cheap. They're not going to have inventory of these at each store.
No, they're not. They're not just sitting waiting there.
Oh, I want to see the finished pictures. Just for fun, I just chose the smallest unit.
Okay.
That's interesting.
I was gonna say 10 by 8's a little smaller. I've seen them do bigger, but that's okay.
I don't know. I chose the smallest size. I don't know why.
No, it's fine.
Like, which is the largest size? 20 by 8.
Yeah, there you go.
So still not massive, 160 square foot. So less than half the size of a tiny bachelor. But that's just what's offered at Home Depot. They have larger ones. Because that cabin looks nice. It's on their website. Oh yeah. Okay. So it looks like they only sell the really small ones on at Home Depot, but this is 2-story.
Mm-hmm.
And then what was the grant for that you got them?
So it's not that we were able to get it as of right now. We're still in the works of that because of
Okay.
the eligibility requirements. But what companies like this are eligible for are manufacturing grants and as well as employment grants. And then again, depending on the specifics of the project, there are other tax credits that can be available on the back end after things have been spent.
Mm-hmm.
Like if you're doing research, you can be eligible potentially for SHRED and different environmental tax credits as well, and employment tax credits depending on your team.
This actually looks quite large. It's 170 square foot on the main floor and 110 in the loft.
Mm-hmm. Accommodating a king
For
size bed.
$60,000 plus tax.
That's not bad. That's a down payment on a house for some, and
That's a
that
parking
could,
spot in Toronto.
yeah.
Oh, they do get bigger. Okay. Fascinating. Very cool. And so who should seek out your services?
So we mostly work with developers and businesses that are either seeking grant funding for a project that they already have or a project that they want to do. So our ideal clients are people that are looking to build affordable housing, essentially. Unfortunately, if we're approached with complexes that are, for example, like I want to build a 6-unit multifamily, is there anything for me? The answer is no. If it's all at market rent, your best bet is to just talk with your mortgage broker and see what options are available to you through those realms. There has to be an affordable housing component in order for us to be able to help on any of the projects.
Now the MLI Select has a affordable housing component as well. Is there overlap between MLI and what you do?
There's no overlap because CMHC, rightfully so, does not want to compete against itself. So the MLI Select is a completely different program versus the Affordable Housing Fund. And you can't double dip because there's different eligibilities for both of those.
Mm-hmm.
Um, the Affordable Housing Fund is extremely competitive. The thing about grants is that the larger area that they fund, and CMHC funds all of Canada, the larger the applicant pool, which means the more competitive they are. Provincial grants, you only have to compete with people in your province. Municipal grants, you only have to compete with people in your municipality. So when it comes to MLI Select, it is a loan program, and I'm not a mortgage broker, so I can't speak to it.
That's okay. We've talked about it lots on this show.
Yeah, in a professional confidence sense, I can't speak to it the way others could, but it does have different requirements for what is considered affordable housing. I want to say my recall memory says that it's 10%, but that the Affordable Housing Fund is much more than that, and it's 30% the last time I checked.
Is there a certain scale of project that people are typically doing that they're bringing to you?
I get different scales. I had a meeting with a developer this morning for 40 units. I have a project that is 250 units. I have a different one that is 160 units. And then I have a meeting next week for a project in Northern Ontario that's 300 units. So they come in all shapes and sizes and they all have different unique propositions for how they want to support and address the crisis.
And then when should someone seek a consultant like your assistance? Are these folks just way overwhelmed? They don't have staff with capacity for what you're offering?
So when I would like to, I say as early as possible,
That's always the case, isn't
but
it?
not too early, not early, but not too early. So we can't help someone that just has a concept. You have to have you have to have a business. You have to be running with staff. You have to have a minimum of 3 years of statements, whether audited or not audited. You need to have financial statements that we can look at because we need to be able to present something to funders because they want to make sure that if they're giving you a loan portion, that you're able to be eligible for that loan portion
Hmm.
as well. So an ideal client is not someone that's coming and saying, Chelsey, I really loved hearing you on Erwin's podcast, and I have an idea to do this in my town. Can you help me? I have a great idea. I love that you have a great idea, but without those initial, the due diligence that we have to do on our side, do you have financial statements? Do you already run a company? Is it do you have a holding company? Do you have numbered companies? Like, what is the structure that we're working with? That's where I can start coming in and helping create that pipeline strategy of what you're eligible for, how we can decrease your operational expenses that you already have with your current staff and future staff, as well as with the projects you have coming up, which would be project-based grants like the development grants we've been spending a lot of time talking about. So,
Yeah, what kind of track?
yeah.
You mentioned like 3 years of financials. What kind of track record is the government looking for before handing out a grant?
So different that's really good for getting feedback on. I like to ask for that feedback before we send it to the application stage. The best part about grants is that they are government employees, which means they have to answer your questions and help you apply by giving you feedback if they have the time. So being able to provide your audited financial statements or financial statements and just getting guidance to ask them, where are some of the red flags that you see within this? How likely is this to get funded? What are some prospective places that we could improve if we don't get funded? So that way you're making it a holistic approach. So if your first application isn't successful, what you've been able to do is have a pathway forward in order to strengthen it. So when it comes to those audited financial statements, Every underwriter, every risk analysis is going to have their own set of restrictions that they're looking against. So for not-for-profits and charities, they might look at your pro forma and they might go, yeah, it makes no revenue. And that's totally fine with us because that's what we are fully acknowledging, that we are funding your outcome and your results. And we're not looking for a return on investment in that way. They're just writing you $50,000 and they're going, send us a grant report when your project is done. Good luck. But then there's the other side of it where uh, they are looking at all those financial statements and they want to see like, okay, um, could these what happens if this happens? If we are the only people to fund this grant and this project, is it going to be viable? Do we have to fund it at 100% or can we fund it at 50% and have it still be viable? Like, will someone else be coming in? How diversified is their revenue streams? So that way we can make sure that if we fund them, this project's going to go through. So
Mhm.
these are the types of questions they're asking based on your financials as well.
Now, like, tell me about these grants that people are applying for because they're hiring you and they obviously have to pay you.
Mm-hmm.
Uh, what is the business case for hiring a grants consultant?
Mm-hmm. So,
Is that just to,
yeah.
for you to appreciate? Like, even I don't even know the answer. How big are these grants? Like, I'm going to guess my 17 listeners, probably 16 of them don't have no idea even how to
Yeah.
name one of these grants, first of all, let alone how much they are.
Yeah, no problem. So I don't work on pipelines under $1 million. The largest grant I'm working on right now is $120 million.
Okay, that's significant.
Yeah, so they range. They range. And because it depends on the project, right? So when people are hiring grant writers, they're hiring a writer that has a specific task and goal, and their goal is to write you as many grants as they can. That's not what we do because we work as a firm. So what we have on our team is lobbyists, fundraisers, accountants, myself as a grant strategist, and we have a team of grant writers. So we bring in a firm that is able to do a lot of that pre-eligibility work of connecting you with other people, connecting you to the right government resources so that way your application is as strong as it can be before it goes into that adjudication process.
Mhm.
So we're liaisoning a lot with different MPs and government officials in order to make sure that they're aware of your project before it even goes into the submission pile.
Mhm.
So we have a lot of pre-work that we do before we do the grant writing and the grant submission because we strategize how to get you the strongest grant possible. However, that grant can only be as strong as the project, which then sometimes with some grants, we actually recommend not applying to them yet. And we go, here's your gap analysis. These are the things that need to be strengthened before we can confidently say that we should apply for this. And then we execute that gap analysis to make the company's project more appealing to those funders to get them that money.
Right.
So um, that's does that answer your question? Does that answer what we do? I'm not sure.
I hope so. I wish my
Yeah.
16 listeners were here. They could ask the questions themselves. But basically, there's millions and millions available,
Yes.
and that's
Yeah. There was.
why. And again, I just generally find businesses, investors, entrepreneurs are all busy. Their staff are already busy. I'm going to guess that your experience and skill set is unique,
The
and they
pain
likely
points
don't
that
already have it in house.
Yeah, the pain points that we address.
Yes.
Typically, I'm working with a developer that says, I'm already busy and overwhelmed and I can't add this to my plate, even though we're supposed to have it. And then I go, no problem. We're going to come in. We're going to either use the pipeline of grants you already have if you're already applying to grants, and we'll execute it with you and we'll expand it. And if you don't have a pipeline, we will source and create one with you in tandem with your vision for your projects, and then we will execute it so that way you can be as hands off as possible.
Hmm.
So that's a pain point we address, is that if people are overworked. We also address if the people are understaffed. So there is situations where we come in and people already have a grant writer, and the grant writer is already writing all the time. And then we go, no problem. You don't have time to do research. We will do all the research. We will do the strategy work for you. So that way you can focus on writing. And then once you're overwhelmed, because we don't want you working more than 40 hours a week, you can hand off some of those grants to us, and then we can work together collaboratively. So that way your pipeline expands without your hours expanding.
Right.
Yeah. So we can work in either capacity.
Right. So they're basically delegating outsourcing grant writing to your team.
Yeah, exactly. Mm-hmm.
Yeah, because I can't imagine it's easy to hire a grant writer.
A lot of junior grant writers, you'll spend the first year getting to know the language of how they can work with you. And that can, none of us are junior in what we do. And so, yeah, you're skipping a lot of steps by working with a firm.
Right.
Yeah.
And then, not everyone wants to have a new hire, especially a junior person.
No, that can be, we all got
Painful.
to start somewhere. Yeah, we all got to start somewhere. So we can't. We've all been an entry level person at some point in our career, but it's if you're looking to be able to get things done right and once without learning curves, it is a safer bet to hire a team of professionals that's able to work. And how we've strategized our pricing point, not that I'm going to say my prices, is that we don't do hourly, which is good because it means that we focus on outcomes. So if it takes me and my team more time to do something, that's our internal problem. That's not our client's problem. We're not billing 5-10 minutes per email. That's not, we've changed our pricing structure, and it's not how, it's just more efficient to be able to be aligned on the project itself. Yeah.
Cool. And I imagine you're like, it must feel good to execute on affordable housing projects.
Yeah.
No different than these developers.
I love what I do. I work on really interesting stuff all over Canada, and it's really rewarding. It feels good to be a part of a solution and to help people be able to find places to live, because everyone deserves to live somewhere.
Mm-hmm. That's super cool because my
Mm-hmm.
wife's other business is CFO services for not for profits.
Mm-hmm.
So it's a lot of charities in there as well that are doing really important work. The new nurse practitioner's office being built in Ottawa right now is one of our clients.
Oh, that's great.
Yeah, exactly. Access to public health care. That's
Who'd have
important.
thought?
Who'd have thought? Who'd think that
Who'd
people would want that?
What? That doesn't sound like that's necessary.
And they're getting some really good government support, and also a lot of support from the city of Ottawa as well, as they should, because these things need to be celebrated. Because
Yeah.
access to a doctor is a challenge in Canada.
Still waiting for one.
Yourself?
Oh yeah. Yeah. The waiting lists are pretty painful. So,
All right. Chelsey,
anyway,
we're running
let's
out of
not end
time.
on that.
Actually, where I like to end on is like to give my guests any final thoughts you'd like to share. But first of all, what's your website?
So we can be contacted through grantsolutionscanada.ca, and you can fill out our form there, and then it'll come directly to us, and someone will get back to you to book a meeting. We book our first complimentary discovery call to see if it's a good fit and if we're able to help you, and then we can move forward from there in helping you with your vision. It's my little plug.
Oh, that's good because you actually have a question on there. Like, what have you? What kind of funding have you already secured? Because you're not for people who have no funding, right?
No, not really. Yeah.
Takes money to make money. Sorry, folks.
Mm-hmm.
Sorry. And then, any final thoughts you'd like to share?
I think my final thoughts are, if you're listening and you're an investor, to remain curious about new investing models that are coming out in Canada and beyond. There are a lot of reasons these funds and grants exist, and it's because typical and traditional loan options don't work for affordable housing because they just can't afford it. So be curious, do research, and see if there's options to support different initiatives in your own community, because it's where you live, and that's really important.
Mm-hmm.
That's my
And listen to podcasts.
and listen to podcasts.
And just share my screen. I was bouncing around your client's website. Like, this is super cool. This is 480 square feet. So this is bigger than a bachelor condo. 130,000 plus HST. That's pretty cool.
Yeah, they're doing some amazing stuff.
Yeah, like I said, it must feel good to support people like this, right? Canadian business creating housing, right?
Yeah,
Just gotta find some land.
I've got a lot of clients doing some pretty amazing stuff, like 100% carbon net neutral builds, um, vertical greenhouses, to address food crises and housing crises all at the same time. 100% recycled water. Uh, yeah, I have a lot of different clients doing a lot of different innovative, creative
Hmm.
things to address multiple issues that come with affordable living. This is because you can afford to live doesn't mean you can afford to eat, right? So,
I had
yeah.
one of the developers of ZB on the show just a month or two ago.
Oh,
That
great.
project is incredible. Have you had a chance to tour it?
I drive by it every day.
Go for a tour. It is
Yeah.
incredible.
Yeah.
Yeah.
Yeah. It's pretty neat. I'm kind of watching it through the window and being like, well, it did a little bit more today, a little bit more today. Yeah, it's great to see.
Chelsey, thank you so much for doing this.
Thank you for having me. It's been great.
All right, friends, that wraps up another episode of the Truth About Real Estate Investing show for Canadians. Hope you got as much out of this one as I did. Remember that whether you're just starting out or a seasoned investor, there's always something new to learn, and it's always about building that practical knowledge base that gets you closer to financial freedom. If you found value today, please do us a favor and leave us a review or a rating, share this episode with a friend, or better yet, join our community of real estate investors who are taking action and making moves. And hey, if there's a topic you want us to cover or there's a certain guest you'd like us to have on the show, drop me a line. My DMs are open on social media. Reply to this email that this has arrived on. I'm not hard to find. You know, we're all about getting you the unfiltered truth to help you on your journey. Thanks again for tuning in, and we'll see you in the next episode. Until then, stay smart, stay curious, and keep building that future. Catch you later.